For financial summary, stay here. For full earnings call recording, skip to minute 2. Total financial results for June 2025 quarter with YOY comparison. Revenue 147.44 crore rupees versus 146 crore rupees YOY with a change of plus 0.99%. Expenses 143.09 crore rupees versus 144.62 crore rupees YOY with a change of minus 1.06%. Other income 1.46 crore rupees versus 1.21 crore rupees YOY with a change of plus 0.66%. Profit before tax 3.93 crore rupees versus 0.90 crore rupees YOY with a change of plus 336.67%. Net profit 2.93 crore rupees versus 0.24 crore rupees YOY with a change of plus 1120.83%. EPS 1 rupee and 80 paise versus 0 rupees 0.15 YOY with a change of plus 1100.00%. Operating profit 4.35 crore rupees versus 1.38 crore rupees YOY with a change of plus 215.22%.
Good afternoon and welcome to Total Transport Systems Limited Q1 FY2026 earnings conference call. We have with us today from the management, Mr. Markan Pradhan, a Managing Director, Mr. Bhavik Trivedi, Company Secretary and Compliance Officer. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Before we proceed with this call, I would like to take this opportunity to remind everyone about the disclaimer related to this conference call. Today's discussion may be forward-looking in nature based on management's current beliefs and expectations. It must be viewed in conjunction with the risks that our business faces that could cause our future results, performance or achievements to differ significantly from what may be expressed or implied by such forward-looking statements. I now hand over the conference to Mr. Markan Pradhan for opening remarks. Thank you and over to you, sir.
Hello. Good afternoon and thank you all for joining the Total Transport Systems Limited Q1 FY2026 earnings conference call. We appreciate your time and presence today. I trust you have reviewed the investor presentation and financial results available on the NSE website. To start, I'll share a brief update on the current economic situation, followed by an overview of the latest trends in the logistics sector. Economy and sector outlook. The global economy is undergoing significant policy changes, influencing trade flows and supply chains. While trade tensions and tariffs add uncertainty, global freight volumes have seen only a limited impact so far. India's logistics sector remains resilient, supported by GDP growth of 6.5% in the year 2025, with the same pace expected in the year 2026. A good monsoon is likely to boost agricultural produce demand, while strong activity in manufacturing, FMCG and e-commerce will further drive freight movement. However, tariffs imposed by US will have some negative effects on certain industries. Government initiatives such as PM Gati Shakti and the National Logistic Policy, along with sustained investment in road, rail and port connectivity, are improving efficiency and expanding capacity. These developments are enabling growth in transport, warehousing, integrated supply chain solutions, and enhancing last-mile delivery services. With inflation averaging 2.7% in Q1 of 2025 and expected to stay well below the RBI's 4% target, a stable rupee, strong reserves, and a current account surplus reinforce India's trade position and attract investments in the logistics infrastructure. Technology adoption, including AI, IoT, GPS tracking, and warehouse automation, is a factor that enhances speed and transparency, while sustainability measures such as electric fleets and renewable-powered warehouses are gaining traction. While high logistic costs and infrastructure gaps remain challenges, ongoing uncertainty in tariff policy remains to be addressed. Looking ahead, the sector is expected to grow at 8 to 10% annually, driven by express parcels, integrated 3PL and cold chain services, with strong fundamentals and supportive policies positioning India's logistic industry for continuous expansion. Operational performance of Total Transport. In Q1 2026, Total Transport Systems Limited maintained stable operations despite global trade headwinds and weaker LCL export demand. LCL consolidation volumes reached 98,700 plus cubic meters, with imports of 40,456 cubic meters and exports of 58,282 cubic meters. FCL Freight Forwarding handled 4,542 TEUs, including 533 import TEUs and 4,009 export TEUs. Air freight volumes improved to 368 tons from 312 tons in Q1 FY2025, supported by increased time-sensitive export shipments. The company continued strengthening capabilities across LCL, FCL, air freight, and last-mile delivery through investments in automation, digital platforms, and enhanced supply chain visibility. These initiatives supported efficiency gains and improved service quality across its domestic and global operations. A key highlight was the performance of subsidiary One World Logistics Private Limited, operating as Abhilaya, which turned profitable for the first time, posting a net income of rupees 13.34 lakhs compared to losses in the prior year and preceding quarter. Abhilaya's revenue reached 2,605 lakhs, up by 6.5% sequentially and 3.5% year-on-year, aided by cost discipline, route optimization, and expansion into Tier 2, Tier 3, and rural markets. The company's consolidated financial performance. Total revenue of Q1 FY26 stood at 147.4 crores, up by 1% year-on-year, despite a 5.6% sequential decline due to current geopolitical situation and dropping freight levels, subdued LCL export volumes. EBITDA increased to 4.4 crores from 1.4 crore in Q1 FY25, with margins expanded by 200 basis points to 3%, driven by operational efficiency improvements sequentially. EBITDA fell 20.4% due to lower freight levels and unfavorable cargo mix. Profit after tax rose sharply to 2.9 crore from 0.2 crore a year earlier, with PAT margins improving from 0.2% to 2%. Strong year-on-year profitability growth was supported by disciplined cost control, focus on higher yield cargo segments, and the incremental contribution from the profitable last-mile delivery arm. With this, I would like to conclude and open the floor for any questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The first question is from the line of Rishabh Sharma from VP Advisory. Please go ahead.
So, how do you plan to expand both freight and last mile delivery businesses? And what is your target margin range for Abhilaya over the next 12 to 18 months?
See, I'll answer. These are two different types of business, so I'll answer it separately. For total transport, we have our budgets in place and we expect a steady rise of 10 to 12% per annum for the freight forwarding and LCL consolidation business. This is also seen in volumes as far as the FCLs are concerned. We have already grown at a rate of 13% in this quarter. Though because of the freight levels being low, the figures don't show like that. But we have to do more business to maintain the same profitability. So we have a very, very aggressive sales team, and we are also tapping the freight forwarders or the custom house clearing agents who are our customers. And we also offer our services to some of the global MNC for the LCL, and for the FCS, we only go on to the customers who are serviced by our counterparts in the international offices. Okay, this answers my question, your question on how do we do on total transport, and this performance has been very steady and the growth has been good. As far as Abhilaya is concerned, Abhilaya is first time we have come into profits in this quarter. Otherwise, all these quarters we have been losing money. What we have done to lose money to stop the losses is we have closed down the dark stores which we were operating, and we are concentrating on the last mile delivery. This year, this month, we have recently got a contract from Amazon for manning 5 of their warehouses. I do not know the actual revenue increase, but the profit will be at least 3 to 4 lakh rupees per month additionally on this. Going further, at this point of time, we do not plan to increase the delivery number of centers that do the delivery. We are consolidating our position to ensure that we get more denser deliveries, more number of deliveries in one area, so that we are able to capitalize it and increase our profit share. However, year on year, the volumes of Amazon go up, and we also plan to increase our volumes by about 20% in this financial year. Is that clear?
Yes. My next question is, how are you addressing high fuel costs and changing freight rates and manpower shortage while ensuring profitability?
Can you repeat your question?
How are you addressing high fuel costs, changing freight rates, and manpower shortages while ensuring profitability?
In which business? Are you talking about the last mile delivery business, or you are talking about LCL consolidation and freight forwarding business? Because the answers are going to be different.
Are you talking about the last mile delivery business or you are talking about LCL consolidation and freight forwarding business?
Because the answers are going to be different. 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 Because the answers Hello?
Hello.
I was talking about SCL.
LCL?
LCL, yes, LCL.
Okay. LCL is less than container load business. The fuel cost doesn't make any differences until and unless the international fuel cost goes up and the freight levels come up. When the freight level comes up, then the fuel cost increase is not a problem because we overall get a benefit of that. When the freight levels are high, our profitability high both for LCL and FCL business. When the freight levels go down, that time even the fuel cost is down. So these cannot be two at one time. It cannot be fuel and it cannot be increase in freight level and dropping of fuel cost. It has to be either or. Are you understanding what I'm saying?
Yes.
Okay. So these are the situations which either the freight levels will go down and the fuel cost will also go down, or the freight levels will go up and the fuel will also go up. Because to a certain extent, freight is one of the fuel is one of the components of the building of the freight. It very, very rarely happens that the freight goes down and the fuel goes up. Okay?
Thank you.
This I have addressed, right?
Okay. Thank you.
Okay. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. Participants may press star and 1 to ask question. The next question is from the line of Madhu Sharma from SK Capital. Please go ahead.
Hello?
Yes,
Am I
ma'am.
audible?
No,
Yes, ma'am.
there are a lot of disturbances behind you.
Is that clear?
Now a little better.
Oh, okay. Good afternoon, sir, and thank you for the opportunity. So my first question is, what caused the sales drop compared to last quarter? And what's your outlook for demand and volume in Q2?
See, demand and volume.
Yes.
We had a 13% increase last quarter. We don't expect increase more than 5 to 6% in the full container load business and about 3 to 4% in LCL in this quarter. The causes of drop in volumes or dropping freight levels is majorly because of the uncertainty of the U.S. tariffs. U.S. is one of the major markets for India, China, and Southeast Asia. When there is an uncertainty in the tariffs from U.S., lot of exporters hold back their shipments. And when they hold back their shipments, there is lot of empty space on these routes. Then what happens is when there is empty space on the vessel, the freight levels will go down drastically. And when these goes down, our margins also go down. Say for example, on a full container load, if the freight level is $2,000, I can make up to $100 to $150. But when the freight level drops to $800, my margin comes down to maybe $30, $40. So this is the combination. So when the freight levels are up, the profitability is better. When the freight levels go down, the profitability also goes down. At this point of time, nobody is certain about what the tariff situation is going to be for the whole rest of the world. And people are not able to predict either increase or decrease. the volumes in this quarter. So I won't be able to answer you this in a pinpoint manner.
Yes, sir. And so second question is, what factor have driven the strong profit and margin improvement, and can this be maintained through the year?
Strong profit margins are not only a product of good service, but also a product of a good cargo mix. We cannot be lucky every quarter that we get a very good cargo mix. Like, for example, on LCL trade, when the break-even is at nearly 55 cubic meters, okay, the break-even is very, very high. When there is a good cargo mix, like, for example, I get 55, say my overall volume is, say, 10,000 cubic meter or, say, 20,000 cubic meter. But if I get 20,000 cubic meters to the ports where I want, my profitability will be high. If I get scattered volumes in a week, my profitability for that week will be affected. We have tried many algorithms, but this has not worked completely. What we can save on is on the leakages, or where we can save on is being proactive in giving the services, and we have revamped our departments. We have trained our people to extent. We are also using bots wherever possible, and because of that, the efficiency has gone up, and that is being seen in the increase in the profitability. We will be able to maintain it to a large extent, but at this point of time, I will not be able to tell you about the cargo mix. Everything put together coming, always helping you is not going to be possible. Sometimes it is otherwise. But on an average, yes, we will be able to maintain. Should not be a problem.
Okay, sir. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Diva Mehta from AB Capital. Please go ahead.
Thank you for the opportunity, and congratulations to the management for making profits in Abhilaya. So my question is mostly on, will this profit sustain? What is your outlook, and how do we see this planning out for FY26?
I'm very, very sure that profits will continue in One World Abhilaya. There are two things, as I said. What we have done is we have a very strict control on the cost. We have, with our software, aligned with the software of our customers, we have done the route optimization.
Okay.
We are expanding into Tier 2 and Tier 3 cities, and also rural markets where the incomes are a little bit higher. We are not looking at adding number of centers for deliveries. We are looking at adding number of deliveries in that particular area. That helps us to have a better profitability. We have stopped all the dark stores. At the same time, we have got 5 warehouse manning jobs from Amazon. This will also yield positive results. We expect about 3 to 4 lakh rupees a month. So I'm 101% sure that this profit will only go up in this quarter. That is my observation.
Okay. We hope the same for you, sir.
Thank you.
Sir, then this was not the quarter where the festive season was there. So as the quarter progresses, we will have the festive season. And so I hope this will if this continues, we will full year we will deliver a good profit for Abhilaya this year.
I wouldn't know good profit or not, but better than what we did last quarter is sure.
Sir, now talking about the LCL and XCL business, seeing the global uncertainties, what is your view and how do you see we will navigate through this situation currently? Other than you have explained the yields because of the tariff, there is a lot of that would impact the freight rates and that will impact the profitability. Other than that, what are the other uncertainties that you see around?
I honestly don't see any more uncertainties than the tariffs. The geopolitical situation, I am not a very good person to comment on, because nobody is correct in commenting on the situation and how it changes. It changes by the hour. But I don't expect too much of uncertainty as far as India is concerned. I'm sure even if there are the global tariffs, US puts on the tariffs, our people will find different markets. We don't expect the freight levels to go up at least in the next 6 months. But I at least expect that it will steady, at least steady freight levels will help us to at least plan something. And that is what is expected unless there is something very weird happening outside the country.
Understood, sir. Thank you so much for your time.
Thank
you. And I wish all the best.
Thank you. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. Participants may press star and 1 to ask question. Participants are requested to press star and 1 to ask question. Is there no further questions? I now hand the conference over to Mr. Makran Pradhan for closing comments. Over to you, sir.
Thank you. In closing, I thank our employees, shareholders, customers and partners for their steady support. At Total Transport Systems Limited, we are working together to improve, grow our place in the logistics market and create lasting value. We are confident that we will make the most of the opportunities ahead and keep moving forward. Thank you.
Thank you. On behalf of Total Transport System Limited, we conclude this formal this Q1 FY2026 earnings conference call. We sincerely appreciate your participants in this event and we kindly request that you not disconnect your lines. Thank you for your time and engagement. Thank you so much.